Did you know there are more than 30,000 banks operating across the world right now? Together, they sit on top of a financial system managing over $400 trillion in assets. That's a number so big, it's hard to even imagine. Every mortgage on every house, every loan funding, every small business. Every salary sitting in every checking account, a lot of it, flows through this system. And most people have no idea how it actually works. Let's fix that. The word bank comes from the Italian word banco, meaning bench. In medieval Italy, merchants in cities like Pisa had to deal with 7 different types of coins at the same time. It was a mess. The men who sat at outdoor benches and exchanged one currency for another were solving a real problem. They were the original bankers. But carrying large amounts of coins across dangerous trade routes was a huge liability. So Genoese merchants developed a brilliant solution: cashless payment letters. You could deposit your gold in one city, present a document in another, and receive your money. No coins to carry, no risk of robbery. These merchant houses soon began lending money to businesses, to monarchs, even to the church itself. They charged interest on these loans and paid depositors a smaller rate. The difference between those two rates, the spread, was their profit, and that basic model is still the core of banking today, 1,000 years later. When you deposit $1,000 in a bank, they don't just put that money in a drawer with your name on it. They lend most of it out. A borrower takes that money, spends it, and the person who receives it deposits it in their own bank. Through this process, your original $1,000 can end up generating $9,000 or more of active money in the economy. This is called fractional reserve banking, and it's how banks create money without printing a single note. Historically, banks were required to keep a fraction of your deposits, say 10%, as a reserve. But in the United States, that formal reserve requirement was dropped to 0% in 2020. Now, the system relies on capital requirements and internal risk models. This all works on one critical assumption: not everyone asks for their money back at the same time. When confidence breaks and depositors rush to withdraw their money all at once, you get a bank run. A bank run can destroy a healthy bank in hours, simply because of a loss of faith. To prevent this, central banks act as lenders of last resort, providing emergency cash. And deposit insurance, like the FDIC in the US, guarantees your deposits up to $250,000. But banking isn't just about taking deposits and making loans. Banks earn huge sums from credit card fees, currency trading, wealth management, and complex investment banking. The 2008 financial crisis happened when banks strayed from their basic function. They started packaging risky mortgages into complex products called collateralized debt obligations. Rating agencies, who had a financial incentive to be generous, stamped these products as safe. They were then sold to investors all over the world. When the underlying mortgages started to fail, the entire system nearly collapsed. Hundreds of billions of dollars vanished, millions lost their jobs, and governments had to assemble trillions in bailouts. The institutions responsible were fined, but they continued operating, and executives even collected bonuses. New regulations were passed, but many were weakened by industry lobbying. This has led people to look for alternatives. Credit unions, which are owned by their members, tend to be more resilient. Crowdfunding platforms allow people to lend directly to businesses, cutting out the bank. And new AI tools are helping people automatically move their money to get the best returns, challenging the old banking model. For 1,000 years, the 30,000 banks managing $400 trillion have funded global trade and fueled incredible growth. But this system has also concentrated immense power and created incentives for dangerous risk-taking, often paid for by people who had no say in the decisions. In today's world, understanding how this machine works is not optional. Who controls the money, who bears the risk, and who decides the rules? These are questions we all need to ask. If you found this valuable, share it with someone who needs to see it, and subscribe for more. The financial system is worth understanding completely.